Well, hello, everybody. Welcome to Sharpen Your Edge, Learn to Trade Fearlessly. This is session 19, VPA. We're going to study VPA Chapter 9, which is Volume at Price. Not to be confused with VPA, but VAP. So in a bull market, it is better to always work on the bull side. In a bear market, on the bear side. And that was done by Mr. Charles Dow, of course, who the Dow is named after. So at the start of this book, Anne made the statement there's nothing new in trading and that volume has been around for over a century. It was the iconic traders of the past with their tape reading skills who laid the foundation for today's VPA traders. Well, apparently that statement is not entirely true. As in this chapter, Anne wants to introduce us to one of the latest developments in volume studies, which takes volume and volume price analysis to the next level. This is called volume at price, or VAP for short. Now we have both VPA and VAP. So what is volume at price, and how does this differ from our study so far using volume price analysis or VPA? Well, first, let me introduce a simple concept which I hope will help to explain. And once again, we return to our wholesaler of goods who has a warehouse with one product to sell. As a wholesaler, and indeed anyone selling anything, he or she is always looking to maximize profits from each sale. And one of the easiest ways to do this is to test the market, right? Now, this is something companies do all the time. A product will be marked at one price, and the volume of the sales will be recorded. The price will then be raised or lowered, and the resulting sales recorded and monitored. Now, obviously, if the wholesaler can sell at a higher price and still maintain the same sales volume, then this will increase profits automatically with no fall in volume. Now, at some point, the price will reach a level at which volumes do fall, as buyers now perceive the products as overpriced and simply stop buying. Now, to correct this, the wholesaler simply drops the price and sales volume should pick up again. On a simple bar chart, this price action and volume would be reported on a chart which looks similar to this diagram. Here we have a chart of volume and price, with price on the x-axis and volume on the y-axis. As you would expect, as the price increases, the volume of products sold falls. This is not always the case, but generally so in most markets. The point here is we now have a map of volume against price. In other words, we can see visually how the volume has changed as the price changes, and this is what volume at price is all about. In a normal volume bar, all we see is one bar. But within the price action, there may be many different levels of price. All we are seeing in a single volume bar is the total volume associated with the price spread of the bar. What this price volume bar does not reveal is the levels of buying associated with the different price points, exactly as in our simple example that I just named. Now, if we swing the chart 90 degrees, then we have a perfect representation of VAP as it would appear on our charts. But before we do that, this is what TOS has. Actually, it has several ways of representing volume at price. This doesn't really do us a lot of good because we can't tell whether it's if volume is accelerating or decreasing as we go along, and really what its relationship is to price action. It's just very, very simple representation, and we need more than that in it. So if we turn this 90 degrees, we get this. Now, perhaps you can see how the principle of volume at price really works, and in many ways, the term itself describes the methodology. What we are looking at here is the volume at the price. In other words, we can see the volumes associated with each price level as the market moves higher and lower. What we have is a volume histogram of the buying and selling volumes associated with each price point. We can imagine this as a dissection of the single volume bar we use in volume price analysis, VPA. Here, the volume bar records all the volume of activity associated within the period of the bar and the spread of the price action. So With VAP, what we're doing is taking that volume bar and cutting it open to reveal where the concentration of volume actually occurs. After all, if the concentration of volume was at the bottom, then this is more likely to be buying volume rather than selling volume. Conversely, if the concentration of volume took place at the top of the bar rather than at the bottom, then this is more likely to be selling volume. Volume at price gives us a different perspective on the more traditional volume bar, which is pretty much all we get with TOS. Revealing as it does the concentration of buying and selling at the various price levels, which in turns gives us an alternative perspective, not only in terms of momentum, but also in terms of support and resistance. And really, as far as I'm concerned, this is really the key point. The way to use this methodology is as an enhancement to the classic VPA approach, and not to reject it, and it's not to replace it in any way. As we will discover here shortly, volume at price gives us a very different perspective, as it provides an insight into the concentrations of buying and selling areas, which to me means support and resistance. As we have already discovered, how to identify these areas using price and price action, VAP then gives us an additional tool to use, which gives us a visual representation of these areas on the chart through the prism of volumes. If you remember in the previous chapter, Anne referred to support and resistance as invisible barriers, natural barriers, if you like. Well, now with volume at price, these barriers are actually revealed on our charts. And however, we must remember VAP is a supporting technique to VPA, not the other way around. While VAP is powerful and gives us a three-dimensional view of the volume and price action, it does not replace our traditional VPA, and it never will. So please use VAP as a tool which to identify price congestion along with support and resistance zones, which you can then confirm with traditional analysis using VPA. And we're going to look at some examples. And the good news is these indicators are generally available free for most charting packages. Yes, that's true, except for TOS, as I've said. They are developing it, but it's not ready yet. Really, the closest thing we have here is our active trader, which does show us volume at price. What we need, what would work, is an overlay of a chart on top of this would really be helpful. Or better yet, what we want to see is this, which are bars anchored to the left. This is volume at price bars, which shows as price moves through in and through congestion zones, we see what kind of volume is happening during those areas of price. Okay, and as price goes up, let me get out my drawing tools here. So this whole area in here encompasses just this price range right in here. And as price goes up, it will develop new volume bars. And you can see we have volume going up is blue, volume going down is red, and the fulcrum is the middle point between the two, which kind of shows you the center point of volume when taken as a whole. Okay, so this chart, it's a 15-minute chart for Microsoft, and as you can see, traditional volume bars are presented at the bottom of the scene, which is what we're used to, while the volume at the price indicates while the volume at price indicates presence, the volume distribution on the y-axis vertically as a histogram, which of course are these blue and red bars. Throughout this book, Anne has tried to explain and reinforce the concepts of support and resistance. It is the breeding ground for trends. It's where they are created and fostered and from which they ultimately break free. And the beauty of volume at price is that these areas of price congestion are now painted on the chart visually for us. Therefore, Let me explain this chart in broad terms and highlight what is perhaps obvious and, more importantly, what is not so obvious at first glance. And before moving to this example, just a quick word about the colors in any VAP bar, which are normally just two. Just as with conventional volume bars, we have a choice, generally red for down and blue or green for up, depending on personal preference. Now, in a VAP bar, we have the same. And what each bar represents with the two colors is the number of up or down candles associated with that phase of price action. If there had been more up candles than down, then the fulcrum of the bar would be more blue. And again, this center point is the fulcrum of the bar. Okay. Conversely, if there had been more down candles than up, the fulcrum would be weighted more red than blue. Now, this in itself gives us a perspective on the balance of buying or selling at this price range. So moving on to our example here, in simple terms, there are four phases of price congestion here. One at the bottom of the chart, which continued for an extended period, which is basically this one. Two in the middle, which I believe refers to those, and which are both relatively short, and one at the top is the current reading range. So what does VAP reveal? Well, first it defines these regions for us on the chart. Each area of price congestion is marked by the volume histogram, which then gives us a sense of the importance of each region. Now, as we would expect, the most dense area of volume is in the first area of price congestion, with two volume bars denoting the significance of this area, one above average and one extreme. So we're referring to these two. And you can see how price, if you look at the candlesticks, you can see how price was basically in consolidation much of this price range. Price was in congestion. And we have a nearly equal distribution of advancers and decliners in terms of candles. The area of congestion above this level is modest by comparison, with only two volume bars of any significance, both of which are well below average. A minor area of price congestion indeed. So we're referring to this little minor area of price congestion right here, and we're referring to these two bars. Next, we move to the third level, and here we see more sustained volume at this level with two above average volume bars denoting an area of price congestion, which is significance. Finally, we move to the current price area where we can see one extreme volume bar. What can we deduce from this analysis? Well, first off, this is the third area, and this is the price congestion that resulted in these two volume bars. And then finally, the top bar, which is more extended, and you can see the price congestion here on this volume bar. First, we can see immediately which of these areas are likely to be significant in the future in terms of resistance and support. When these areas are revisited, these levels, which were once invisible, now become visible on the volume histogram, and from which we can judge the likely level of support and resistance accordingly, right? Easy to see support and resistance, support, resistance, support, resistance, and then support, resistance. There are several levels of support and resistance within this price volume frame right here. And of course, time is all important. The longer a market is in a congestion phase, then the higher the concentration of volume we expect to see within the price range. It goes without saying that if the market pauses for days or weeks, then all this volume is contained in a relatively narrow price range, which in turn will be reflected in the VPA histogram on the left side of the chart. Moving to the next area of price congestion, which in this case only lasted a handful of bars, a few hours at most, before the market broke higher and moved on. This is a secondary area of congestion and instantly recognizable as such with our VAP volumes. These are below average and only two of any significance, so this region was So if this region were tested in the future, it would not take much effort to penetrate this level either from above or below. We're referring to these two volume bars right here. Finally, we come to the third and fourth levels of price congestion on the chart, which are the most revealing. The first of these lasted 14 candles. That is this. And we're talking about these candles right in here, there to there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Yep, there they are. 14 bars right in there. While the second lasted the entire session of the day, however, look at the associated volume bars and compare these to the price congestion that lasted for 3 days. Down here. The most recent price congestion phase at the top of the chart, which lasted a day, has almost the most concentration of volume as in the first area of the price congestion, which lasted for 3 times as long, about 3 days. So what is the volume telling us about the congestion phase of price? Well, once again, as with all volume analysis, it is in comparing one with another that the anomalies are revealed, giving us the validation we are always searching for in any analysis of price using volume. And in this respect, VAP is no different. In this example, in this figure, we have an intraday chart with the congestion phase at the bottom of the chart, giving us our benchmark against which to measure other areas of price congestion and their significance. Now, while the second phase of congestion is, as we would expect, with below average volume bars and a short phase of sideways price action, the next level above, our third level, is already starting to ring the alarm bells. And here's the reason for this. Because here we see a price congestion phase over a short period of time, but with above average volume bars and spread over a deep area of price. So an alarm signal is sounded. From a trading perspective, if we were holding a long position, this would give us the confidence on the breakout higher. And this was significant. This was a significant area of price support, and we could therefore continue to hold the position with confidence. Then we arrive at the fourth level on our chart at the top of price action here, with the congestion phase marked with ultra high volume on our VAP and additional high volume bars in a very narrow trading range on our traditional volume bars down here. Clearly, the market is weak at this level, and the volumes are heavy and likely to be selling in this region. After all, on volume of this strength, we would expect to see the market move higher, but it hasn't. Instead, it has remained range bound. Okay. I know this is confusing. I get it. I had a really kind of struggled with this, with the correlation between the volume bars and the actual price action, but it does make sense, and I can see where this is valuable. This is a really interesting chart. It's an hourly chart this time for Alcoa, but look at the huge volume spike in the center of the volume right here. Let me get my right there in the center. Right, it is enormous, and more importantly, is right in line with the current price action, which is in congestion, as we can see right here. There's congestion going on there. The market has traded in this range before, and clearly this represents a very significant area of price consolidation, as evidenced by the VAP. As you can see in the past few hours, the market has rallied and attempted to breach this level, but failed. And no wonder, given the volume profile on the left of the chart in the VAP histogram. At this point, we'd be moving to our traditional volume price analysis to look for anomalies and validation, which may very well confirm this view and suggest any breakout is likely to be in the downside. And as you can see, we were in congestion here, and the breakout was indeed to the downside. Okay, that's really all I can show you with this, and I hope this made some sense. In the next chapters, we're going to examine some further examples of volume price analysis. However, I'd really urge you guys to check this out for yourselves if you have the book. Um, the examples I use here have all been using stocks, but the technique applies equally to the stuff that to QQQ, to the ETFs that we do. I just couldn't find in a QQQ or an ETF example to show you. Okay, that's it. Any questions?
Yes. What are the bars on the bottom, Tim?
So those are traditional volume bars on the
Okay,
bottom.
that's what I thought.
Yeah, which is what we see on ours. Um, yeah, and this is again, I apologize because Thinkorswim doesn't have this, and I really wanted to be able to show this to you on our system so that it makes sense. Um, but it,
Tim, it'd be curious to see in conjunction with this kind of chart where our zones are that we draw in there
mm-hmm,
in conjunction with that.
mm-hmm.
Because initial gut reaction is, man, this is just stimulation overload, and I'm already overloaded now trying to pick my spots.
I know.
Yeah.
I know. This is almost a just for your information. We can't actually apply this in TOS because it doesn't have this capability to do this. But I wanted to, and as I said, I really debated on whether to even present this today because I can't demonstrate it in the current tools on TOS.
You know, if we're looking at longer term trades where we are looking at 15-minute or even an hour chart, I can see where we would have time to really analyze this.
Right.
With 1 minute chart, it makes it very difficult, I think.
Yeah, it does. And, be honest with you, I'm not sure this even applies to our type of trading.
Yeah, yeah, yeah.
Um,
Well,
but
this is like another indicator above and beyond what we already know, right?
yeah,
Okay.
yeah, yeah, absolutely. And if this were available on TOS, I would use it because it does bring in some valuable information. Um, but it is really another way of looking at what we already have in terms of our volume bars and our 100,000, 50,000 levels that we use in our trading. And that's the volume we use. But we also have what's interesting in TOS is the active trader, which actually does show us volume at very specific prices.
Yeah.
Which I think can be useful. The only thing is relating it to a chart. This would work if it had a chart overlay where the volume bars were actually part of the price. But and with active trader, we're just looking at a not at QQQ as a whole, just specific strikes within QQQ. So it does have some limited application using this.
And are the shades of these bars on the left, are they associated with bid and ask orders, or are these actually traded orders?
These are actually traded orders.
Okay. Okay.
And the way that it works is it shades from darker to lighter. As it gets lighter, it just represents more volume. Unfortunately, it doesn't represent advancers and decliners in there. That would be useful if they had turned this into just a two-color bar with a fulcrum to allow us to see in terms of volume what the ratio is between up bars and down bars.
Yeah, I have seen this on my active trader before, but first of all, I don't have it blown up big enough, so you don't really see a lot unless it's an abnormally high amount of traded.
Yeah.
But you also do see, though, if you're trying to put a order in above like where it is, where there might be quite a few trades, at least in the past, that have happened,
Mhm.
might be a resistance point.
Yep. Yep. Absolutely. We can at least see that with these longer bars where price was having some resistance breaking through in terms of volume.
Yep.
Yeah. So anyway, any other questions?
Those volume numbers on the left side of the previous chart, are those actual numbers, or is there
Yes.
a multiple of that?
No, those are actual. Well, what you do is you add a 0 to those numbers to get the actual numbers.
So they're actually 10 times that.
They're actually 10 times that. Yep.
So so the two at 260, somebody bought, or several somebodies bought 5,440 contracts, or 5,440 shares.
Yep.
Because these are shares of the underlying, right?
These are shares of the underlying, right?
So they're not contracts of options.
Well, actually, this is an individual strike.
Is it?
Yes, because that's what, in order to use active trader, you have to put in the individual strike within there.
Yeah, these are just price levels for that strike. Yeah, absolutely.
Yeah. Yeah. So there we have it. Anything else, guys? Any other questions or discussion? I appreciate you listening on this, and I know it's kind of hard to apply with the tools that we have, but it was the next chapter to cover in volume price analysis, so I didn't want to miss that. All right.
Hey, Tim, we only have 3 more chapters, right?
Yes, sir.
All right.
Okay, I'm going to go ahead and stop the recording.